Hello and welcome to this weekend silver chart analysis for the week ending the 22nd day of November 2013. My name is Derek and we'll take a look at the daily, weekly, and quarterly time frames relatively quickly. I talk about these failed moves. You break above this 18 average like you see here. You are unable to find support within the band and break higher. There's a support within the band, but unable, of course, to break above previous resistance. Oftentimes when you see that pattern, failed move, fast move in the opposite direction. So there's the failure, there's the fast move down. You can even make a case in here, comes above this 18 average and starts to rise. And there's a resistance within the level, down she goes again. Also the Fibonacci retracement lines, perfect support, resistance, support, resistance, support. More times you test it, more likely is you take it out. It has been taken out right now, and of course several days now below the 18 average of lows. A typical bear market. The whole game is a Ponzi scheme, as I have researched, and a charade more than anything. It's been a very long bear market as we now approach 2014. The top was 2011. We are closing in on 3 years since the 2011 tops. Weekly time frame, there again, failed breakout, fast move, failed breakout, possibly anyway. Now the fast move, is it going to come into play? It looks now as if we're going to have a test of this previous level. Yes, maybe it might be creating another possible failed breakdown, but you know, I was probably saying the same thing in here too. It didn't cause a failed breakdown at this point. Price action goes from 29 down to 18. Therefore, when we look at this again, you want to expand the time frame. What's below this low? We can do that with the monthly, but we're not going to. We'll do it with the quarterly instead. And now you have to ask yourself, beg the question, okay, is this it for the run? It started down here, and the price action went from 4 to 50. Now it's retraced. It's at the 63.7% mark from the low and the high, but it's also had support up to this level, back down, testing this level once again. Just by looking at this area, the next key support level, if 18 doesn't hold, well, it's this area around 15 or 14 and change, which sounds and probably is insane. But the economic model, as we play it today, one that guarantees debt within this fiat currency, based on simple math that only the central bankers, like the Federal Reserve, can create, what, by definition, is that of counterfeit money. Money, of course, needs to have a store of value. Fiat currency does not do that. Counterfeit, an imitation of something genuine, usually within fraud, which is exactly what's the case in here. People seem to not be able to understand the economic model, even at a basic level, which is why this game is still playing out. So just maybe it may come down here. After all, I have felt that the only serious risk of buying silver is a failure for the masses to understand the economic model, and then the big bankers able to do what it is that they like to do. Thank you for tuning in and have yourself a great week. Bye-bye.